Hello, everybody. Joe Malone here, coming to you live on Dallas Trading Floor. It is a Friday, so happy Friday to everybody out there. And it looks as if we are possibly getting to a point where we will know what the situation is on the election. But it appears that Biden is in the lead. So the question is, how's that going to affect the market? I have a few ideas that might be helpful there, and I kind of just want to share them with you. So here we go. For lack of further, there we go. So basically, the market is still in a confirmed uptrend. And it does look, it is increasingly looking like Biden may be the winner here, but we don't know yet. There's going to be a lot of court challenges, and this may go as long as December 14th. And of course, for everybody of you that were in your civics class, December 14th is the day in which the electors actually go to all the state capitals and actually truly elect the president. So we are probably going to be in some sort of gridlock until then. I think there's going to be a lot of court challenges. And so I have some ideas on how that might play out and work. But basically, this is kind of the way the market direction is looking. We're up very slightly. It pulled up and then it pulled back a little bit, as you can see. This was taken earlier in the day. The Dow Jones was off a little bit. The S&P, kind of just hanging in there, but the real star, of course, was the Nasdaq and I did some buying today on the Nasdaq. The QQQ, just wanted to show you that chart. The QQQ has pulled up and it is at 294, and I think if it pulls up to about the 300 level, I think we've got it all cleared. We may be going up from there, but it definitely has changed direction. There was a fall through day, basically on Wednesday evening. I sent that out on the chat as well as on the action trade alerts. Now, if you want to receive those action trade alerts, and that could be important when there is a change in the market like this, the best and easiest way to do it is to basically go to www.Dallas Trading Floor and just sign up for the free trade alerts, first and last name and email address, and we'll send it to you out. And of course, you can get off the list anytime or subscribe, however you want to do it. But we did show on Wednesday that there was a confirmed uptrend that has changed. We had changed direction from a market incorrection to a confirmed uptrend. So that's why it's so important. That's why we always look at directional things. Now, when the market changes to when the market changes to a confirmed uptrend, that is when we want to start moving from cash into the market. We're going to see our biggest increases really in that just when that happens. So now is the time to move from cash into the market. Also wanted to show you the slide for the Spider, and of course the Spider is the world's largest ETF, and it is currently at 350.54. It's up 30 cents. But what's significant on this is that we're very close for it to retaking its all-time high, and that's about in this phase of about 360. So it's very, very important that we get ready, because it looks as if not only the tech stocks should benefit on this, but the broader market that's represented by the S&P 500, that will also benefit here. So we have 350 on the Spider, and again, this is the world's largest ETF, and many people have their entire retirement in here. So that's good news for people that are in the Spider. And I do think, if we move above the 360 level, it's definitely on. It's definitely on. Because of the potential win by Biden, we will probably have divided government, and that sometimes can be very advantageous. It just depends on kind of what you're in. But one thing is for certain, and that is next year I think we're going to see a weakening in the dollar. The dollar is probably going to retreat from where it is now. So how do you protect yourself against that? Well, the traditional way, of course, is to buy gold, but there's issues with gold, and and there's a lot of issues with gold. Kind of the new way to do it, of course, is with Bitcoin. But the question is, how do you buy and sell Bitcoin? Well, it's very difficult because the price of each Bitcoin is quite expensive. But there is a way to do it, and this is how I hedge with Bitcoin. I use I use an ETF called the GBTC, or the Grayscale Bitcoin Trust. And what that is that this trust holds the world's most Bitcoin. It holds about 4% of the world's supply of Bitcoin. And so this is an easy thing to move in and out of. I bought a little bit more. It's in my portfolio, and I have other portfolios that I did buy a little bit of this in today. It's up about 14 cents at 17.41. So definitely affordable, and it's going to show very, very good strength. It's 89 relative strength with a lot of buying going on. So this is a way that you possibly can very easily benefit from Bitcoin. Also, I did have another gap up that I wanted to show you today. I did go into this in the other portfolio. This is a company called Palantir, and I don't know if you've heard of Palantir, but Peter Thiel, who was behind PayPal, and Tesla, has been in this one for quite a while. They did move their headquarters from Silicon Valley to Denver, but they're just right before earnings. This is a little bit higher risk because we're going to come through earnings here and we're going to see what happens. But basically, this broke through a buy point and it moved higher. So this is done. This probably will pull back a little bit. So setting a traditional 7% stop loss probably isn't where you want to go on this one. You probably want to set it a little bit lower than that, maybe at about the 1040 or 1050 level on that. But this is looking quite good. Now, normally I do not buy IPOs when they come out of the chute. The reason is because they almost always go down, and this is the case with Palantir. It came out of the chute at 725. It then shot up to about 11, and then it pulled back, and then of course it consolidated. But the fact that it moved higher here, that is basically going through the discovery phase. This one also has very good institutional support from a lot of the from a lot of the funds out there. Another one I added today, and this was on a breakout to kind of with a flag formation. This was Snap. You're probably familiar with it. It used to be called Snapchat. It's now called Snap Incorporated. And I did purchase it on the breakout when it moved above the high. It broke out initially, and then it consolidated on the 10-day on the 10-day line, and then when it pulled above that 10-day line, that's where I bought it. So I did buy that one for the small portfolio. They had tremendous earnings. They were up 120% in the quarter. So that's not all the time do companies pull back when when there's earnings. I just want to show you the list of my holdings. I didn't get time to put Snap on this. That's the only other one that I have on this, but this is my holdings currently. I'm in Cloudflare. I'm also in GBTC. That's the Grayscale Bitcoin Trust. I'm in FormFactor. We've done pretty well on that one. ResMed, RMD. I'm also in Imphy. That is a chip company in the 5G space, doing quite well. Also, Palantir, that is the one that I bought today. I did buy Facebook yesterday. It's off a little bit, but I did sell a call on that one as well. And I'm in AMD. And, of course, the one that I did not show here because I ran out of time when I'm making the slide is, of course, Snapchat. And I was in that one as well. So, without further ado, let's get to some questions here. So let me thank you for waiting. Appreciate it. Okay, so Marvell agreed to buy Imphy for $157 a share. Does that mean that we should buy more with a guaranteed price? Well, that's one of the reasons I'm in Imphy, to be honest with you, is because of that Marvell technology that Marvell technology agreement. Now the question is, will they consummate the agreement? Who knows? I probably will. So let's kind of look at IMFI to see. IMH. There it is. IMFI. IPHI. Let's look at IMFI. And there we go. There's IMFI. Let's look at the chart for IMFI with that guaranteed price. Right now it's at 155, so it does have a little bit more to go at 157. I do think those were equalized, and I did move into it kind of at the last minute, as you can see here. My buy point on IMFI was at 145, so I wanted to see that little, but I do think that 157, that's going to be the top for that. So yeah, that's definitely that's one of the major reasons I bought it, and I think that should be good going forward. Now, hopefully, I'll get my slides right here. So here we go. So thank you for that. So thank you for that. Yesterday, thank you for It's Just Insight. Can you look into XPEV? Let's look at XPEV. Thank you. All right. Did I get that right? XPEV. Well, I apologize. I don't see, Jorge, I don't see that one. I don't see that one here. Let me see if I can. I can't find that one, Jorge. Sorry, I apologize. Palantir. Sell or hold. Very good, Harris. Thanks. Well, I bought more Palantir today. I hope I didn't jump the gun on it, but I am probably going to be holding it into earnings. Earnings are in 6 days. I may sell it into earnings depending on how it's reacting. But I definitely was a buyer of Palantir. I was a buyer of Palantir today. I was a buyer of Palantir. So what I'm looking to is hold it, probably make a decision next week to see how it's looking. I may actually hold this one through earnings. I normally don't do that. If I do, I'm going to reset my stop losses down a lot more because it can snap back very, very easily. And it's pulled back a little bit today as well. So this is a volatile one, and it could go, but it could go lower. So I'm going to take kind of a wait see approach, but I'm definitely in it. Okay, so I finally bought Snap today. Good for you. Missed your original buy. Okay, I'm sorry about that. I bought Snap as well. I bought Snap as well. I think you're going to do well on Snap. It's set up very nicely. It came through earnings, and I think there was, I think there's potential for some good upward momentum. Just want to show you the chart for Snapchat, of course, so we can take a look at those buy points in there. There wasn't really a good buy point on this. I'll be honest with you. My buy point was based on this little kind of, I don't know if you can see it on your screen, but this is the 10-day average. I bought it off the 10-day average because there really is, the only formation here is way down here at 2676. I mean, at 2676. This is the buy point on a cup formation. Well, that's too low. Sometimes you have to buy at a secondary buy point. That's definitely the case with Snap. And that was off of the 10-week line. But I think you should do very well. I think this is going to move. The fact that it has moved higher than 4408 is a good sign. If it holds on to this gain, I think it's going to go much higher. It's going to move higher based on the chart pattern. Also, another thing you'll notice is that we've had some good buying activity today. As you can see with this volume line, it's right up to the average. This is exponential, by the way. So this shows a lot of interest at this level. So let's look at the checklist to make sure that I'm not totally feeding you a line. It's 8 out of 9 on the checklist. That's very good. Let's look at the funds. The funds are good. It's increasing on the funds. So I'm fairly confident on this one. And again, we just came through earnings, which is nice. We have a long time to hold this one, potentially until the next earnings. So I hope that you do well. I think you'll do fine with 44. I really believe that's a good price. I think you'll do fine with that level. Good. Snap, how high can it go? Snap could go. Actually, Snap could go very high. Let's look at the weekly chart on Snap. I do think it can go potentially a lot higher, depending on just depending on how people come into the stock. But I kind of want to draw a line, a sort of a channel here, to get an idea of kind of how. Oops, if I can get that. There we go. So this is the bottom part of the channel here, of course, and as long as we maintain this slope, this is the top part of the channel here. So this is kind of the channel that I'm expecting on this. We are probably going to see a little bit of a pullback on Snap, but I am confident that with this level here, with this level here, I think that the pullback will probably be to 40 or maybe 39, but I do think that it's then going to form a new channel going up. That's my opinion on it. So I think that it could go as high by the end of the year. I believe by the end of the year we could be seeing a $60 stock with Snap very easily, just depending on how how it lines up. But I do think that we definitely it's definitely going to go higher than it is currently. Okay, yo. It's time to get into LI. This is, of course, one of the Chinese electric vehicle manufacturers. Not quite as not quite as storied as NIO, but not bad either. I mean, this has unfortunately this is basically an IPO. So it gapped up and then it's moving higher. And so could you buy this? Yes, you can, but I'm a little bit leery on it. It does look like it's gapped up above the former high on it. So would I buy it at this level? Well, I think it definitely. Let's look at the criteria. It's got a 77% checklist, which is good. 7 out of 9. That isn't bad. Does it have any? Yes, it has funds in it. So you know what? This is buyable, but I think I would wait a little bit. I want to see this thing pull back, possibly to the 21-day exponential. I think that would be the place to buy it. It doesn't have a cup formation. Let's see if I can give you a buy point on this one. Yes, there is a buy point on it at 21.86. So let me put that out on the chat. LI buy point is equal to 21.68. So that's the buy point on that particular one, and it does look like it's pulling back a little bit. But if it can maintain above 24.848, I think that we might have a winner. It's pulled back today. It's down $1.50 as we speak. But again, I do think that as long as it doesn't change direction, we ought to be okay on that one. But if you buy this one, set your stop loss fairly tight, because these can reverse, and believe me, when they do, it's not fun. And I don't think there's going to be a short squeeze on it, just simply because most of the Chinese stocks don't have a lot of options action on them. But still, be very careful on this one. Very, very careful on this one. Bought PLTR, Palantir, winning big, up. Should I hold or take a profit now? Let's look at PLT. Here's the thing. Is it PLTR? Plantronics. Is that right? For 98. Huh, okay. Is that right? PLTR. Did I get that wrong on that? I think you mean $9.88. Absolutely. I think what you ought to do is hold on to this one. And here's the rule. When you have a stock that moves up more than 20% where you bought it in less than 8 weeks, if a stock moves up more than 20% in less than 8 weeks, you want to continue to hold it. If, for instance, the stock moves up 20%, but it is more than 8 weeks, then you want to sell half of it. So that's what you want to do. So right now, it's pulled up faster. It's pulled up, over 20% in less than 8 weeks. You want to hold this one. You definitely want to hold this one. I think you're going to go higher on Palantir. Thank you for that. Thank you for that. That comment. Appreciate it. NVIDIA. You know, NVIDIA is the other great stock. I'm not in it currently, and it's mainly due to its price. It's pulled up above a buy point. It's in a buy zone right now. NVIDIA is right now in a buy zone. The This is a good chart, by the way, for NVIDIA. It has a it's at the top of the buy zone. The buy point being 573.94. So let me put that NVIDIA buy point in there. NVDA is that, and the buy point on that one is equal to 578.94. Okay, great. There we go. And then I'll put that out there on the chat. I like this. I like NVIDIA a lot, even at these levels. I like it. It's got a 100% checklist. Its ownership is very strong. Very nice stock. I think this is probably going to go higher. Now, here there is a potential roadblock up ahead, so you got to be careful with this. In 12 days, we're going to go through earnings. So if you do go into NVIDIA, it's probably a good idea to buy it into earnings and then sell it the day before earnings. That's probably the best bet I can tell you on that. But it definitely is buyable at this point. It's an excellent chart, and I think you'd be very happy with that. All right, let's take a look at ARRY. Let me see if I can give you an idea on that. ARRY. And that's Array Technologies. It's a recent IPO as well. It has an IPO base and it's pulled above. It's pulled above, so that is looking fairly good. And I think we have about 3 months of work here. It's not. There are several things about this. It did move up that I want to bring to your attention that might be kind of a deal killer. The relative strength is only 72 on this. So let's go to the weekly chart to see if we can get some good idea of kind of where they're going. Another issue that I have with it is that they had sales growth, and this is the key thing in a growth stock. Remember, in a growth stock, profitability is not nearly as important as quarter-over-quarter sales growth. The quarter-over-quarter sales growth of Array Technologies has been excellent, except for last quarter. Their sales were down 29%. Now, of course, this is because of the COVID thing, but it's still not good. So I am a little bit leery about buying Array Technologies based on this. I think you want to wait on this one, possibly until it's seasoned a little bit more. Let's look at the checklist. The checklist is only 3 out of 9. I can't recommend that. And unfortunately, there are no funds in it currently. So I think you have to take a pass on Array Technologies. I don't think it's going to give you the kind of performance that you want. So I would not move into Array Technologies. Let's take a look at the next one, IFF. And there we go. That's this is a famous company, International Flavors and Favorites. I'd forgotten about this one. This was a go-to for many years. People would have this in their portfolio, and basically what they do is that they have all of the additives that make all the flavors for the various, they're the ingredients business, and there's several other companies that are sort of in this area. But I don't like this chart because it has a relative strength of 14. This used to be, back in the day, this was a high flyer, but I don't think you really want to be in this one now. It's got a terrible checklist, 3 out of 9. It's got a downward trending chart, and so I just don't think you want to. And there's a lot of selling, and there's earnings in one day. So I think you want to avoid International Flavors and Fragrances. I just don't think that it's going to give you the kind of results that you want. So without much ado, let's go to the TikTok. And I'm sorry I've been off there a little bit. NVIDIA, okay, we talked about that. This is the way. Okay, how much money do you have in the market? A fair amount. A fair amount. I'm moving from cash into the market right now. A fair amount. How much money do you have in the market? Okay. NVIDIA. Okay. Hey, what do you think about Snap? Well, I bought Snap today. I love Snap. Snap is, Snap is a good one. I bought Snap just before I went on the air, and I did it. What happened is, actually earlier in the day, I got an alert from my system that it was moving above its higher high on a flag pattern, and so that's when I bought it. So, yes, I like Snap a lot. I think it has a good chart. It's just come through earnings, liking all those things. I do think that that in terms it's in some pretty rarefied atmosphere, though. It's one of them is, of course, Pinterest, which I also think is good. I'm not in it, but Pinterest is a good stock. Pins is the symbol on that one. That's sort of a peer of Snapchat. But it's pulled way up. It's got a 98 relative strength, very strong. And I think that it's likely to continue moving on the 21-day exponential. That's what I'm looking at right now. So it's very good. It does have increasing fund sponsorship. I really like seeing that. And I think out of the ones that are in its peer group, Zillow, SEA Limited, Pinterest, I think that its peer really is Pinterest. And I do think I absolutely like Snap a lot right now, at least for right now. Right now I like it. Right now I like it, and I'm definitely in it. So there we go. Okay, so let's go down here a little bit. Snap should put or call. What do you think? Good question. I don't know what the calls are selling on. Let's not guess. Let's figure out a way that I can give you an actual real idea on options on Snap, because I think that's a good point that you bring up. All right, I want to look to see if we can. Yeah, there we go for Snap. Okay, and I've got that. Okay. So let me go over here to like some of the early December. If you're going to buy this naked, which you might want to do, I don't know. This might be the good way to go. So let's look at the December 11th Snap contract. So let's take a look to see. This is pretty bullish, actually. The December 11th call contract for Snap is at $2.98. That's fairly expensive, but that's telling me there's going to be a lot of action. So this is definitely going to go above 45 by December. So I think this is very bullish, but I definitely think that you could do well with a Snap with some naked calls. I wouldn't necessarily recommend it right with the short expirations. I would want to be out at least a month. I want to be in the Decembers or the Januaries. I don't want to be in the Novembers calls on that. But I definitely think you could possibly do it. I would probably go with a call rather than a put. To be honest, that's a good question. Thank you very much for that. All right, so let's go down the list a bit. Okay, I am holding BBI. What do you have to say about it? Well, okay, let's look at BBI. To see if we can see anything. Brink Biotech. Ooh, this is awful. I'm not trying to be critical here, because this has got a rating of 1. Now this one, I don't. This would make nice wallpaper. This fails on 3 out of 9. No, this is it just depends. I mean, I don't think you're going to get your money back on this one. This doesn't look good. I mean, it might turn the corner. There's earnings in 6 days. I mean, at this point, you probably should just hold it. But at 53 cents, this is a penny stock, and this is one of the reasons I don't typically like to buy stocks that are under $10, because when they collapse, boy, they really collapse. So, I mean, you could definitely hold on it for grins, but you probably have lost your money in this one. Just saying. You're probably lost money in this one. Okay, Palantir. Looking at NVIDIA. Okay, Array, International Fables and Favorites, IFF, all good stocks. ACB. What do you think? All right. Well, hey, that's great. That's great. Are you listen? I hope if you're listening from Mexico or that's great. English City, Pentecostal, excellent. Really like that. Thank you for tuning in. I so appreciate it. I'm trying to improve my Spanish, which is horrible. Okay, ACB. ACB, let's look at it. Aurora Cannabis. You know, here's the thing about the cannabis stocks. This is a fairly risky way to play the cannabis space by just having one. And I know that Aurora is one of the best ones, but as you can see, this has just collapsed over the years. Let's look at the monthly chart of this one. This is one of the reasons why I don't think you want to be in the cannabis space. It got as high, and this is amazing. Aurora Cannabis got as high as $140 a share. It's now trading at $9.70. This is just not the kind of chart you want to see. I don't think this is a good space to be in with this. So I would not be a buyer of any of the cannabis stocks right now, and especially not Aurora. Let's look at MJ. That's the ETF that basically does that is a little bit more broad based. That's really the only way I would play this space, and even there, I wouldn't. Now a few years ago, I did play this and I did fairly well, but that was at the beginning. That was before everybody, the brothers, started growing commercial marijuana in Oregon, and of course there's a big oversupply. So yeah, this just doesn't. You just don't want to be in the cannabis space, and it's not for any reasons related to cannabis or not cannabis. It's just not a area where you're going to get a lot of upside potential, because there's just a way big oversupply. It's too easy to grow, and the regulations are just too complex with it for the small guy. So I just think you want to avoid it basically at all costs. Let's look at Workhorse. That's WKHS, Workhorse. I want to look at the weekly chart here. Let's see. It's pulling back a bit. So let's kind of analyze that to see if there's anything that we can buy there. Its breakout beyond the consolidation has failed. So this is pulling down. You don't want to buy it at this level, unfortunately. I'm afraid that we have that is the trend, and it is down. So I don't think we want to be in this at this time. It just is not the kind of trend we want to see. So, Workhorse is just one of those things where, it's better to just sell, preserve your capital, and see if there's a turn on this. But I just don't continue on this one. The chart is not there. I mean, even though it does have a relative strength of 99, I think, we may be in a situation where this is turned lower. It's still got 6 out of 9 on the buying criteria, which uses my minimum. And we do have increasing fund ownership. But for some reason, the funds seem to be selling this one off. Let's see if we can look at the monthly chart to see. Yeah, it's probably going to pull back, probably in tests, at least the $11 level. It's at 17 right now. And then we might see it move higher. But right now, well, it looks like it's going to pull a little bit lower. But here's the thing. If we do get a reversal bar on this, which we don't really have, if it pulls below 14 and then reverses, this might be a buy up to about 30. It's up $1.91 today, but I think it's this isn't a bad chart. This isn't a bad chart. Here I am being so negative on it. I'm just looking at the daily trend. The daily, I don't like the daily trend, but I like the weekly trend. So, we may have seen a turn. We may have seen a turn on it, and if we did, it would probably go back up to the $30 level. It looks like, if this is truly a turn on the, So yeah, I could see that. You could follow the trend here. It's pulled a little bit lower today, which I don't like. I don't want to see this thing move above the 21. I want to see this move above the 21-day exponential, and that would be right at about 19. So I'm not interested in buying this thing until it crosses about 1950. I'm not, because it could continue on its downward trend, and we want to buy it on uptrend. Would you sell Palantir? I bought it at $13.50. Well, here's the thing. What I would do is I'd lock in your profits. And the way you can do that is set a stop loss. Set a stop loss down. It's 1380. Set a stop loss at 1350 and see what happens. It's pulling back a little bit. You might round trip it. I hate round tripping stuff, but you might round trip it. We're a little bit too high to buy it right now. The real opportunity, of course, is when it pulled above this 1129. I was in it basically on an averaged basis at about that. Yeah, it was 1186 on that. So, that was. I think the way to play this one is set a stop loss slightly below your cost at 1350. Set a stop loss at about 1325. And see if it holds this level. If it does, then you're going to be in the gravy. If not, then you're not going to destroy your capital. So that's what I would probably suggest doing for right now on Palantir. And I do think that it has legs. I do think it's going to move higher. Okay, our market's always lower on Friday due to option selling. Well, not always, but they many times are. This is one of the reasons why I actually. I like to buy on Fridays for this reason. But I don't just buy anything. I buy stuff that's breaking out. Anything that shows a lot of strength on Friday, I'm liking because that shows there's even more strength. But you are right. Typically Fridays, especially into the close, move lower, and that's because people are selling to cover for the options, the options expiration. So you're absolutely right about that. Okay. So let's see. Happy Friday. Thank you. Thoughts on Chewy and AMD? Well, I actually own AMD too. So let's look at AMD first. AMD. And I think AMD is doing pretty good today. 85. It's up about $2.50. So I'm pretty happy with that. Now that it's moved above the 40 day on the daily chart, that's looking good. I do think we have a potential W formation here, and that does pretend well. It's probably going to see some resistance at about 88, but then I think it probably will move higher than that. I'm looking at this. Basically, it had very good earnings. I think we're going to go higher on Advanced Micro. I think we're going to go higher on Advanced Micro, and hopefully I am right on this one. I have been disappointed many times on AMD. It's just one of those stocks that I keep trying to get in and make it work, and hopefully now it will. I do think I do really like the trend on AMD, and in terms of the chip stocks, it's one of the best. As you can see, this is the channel here. There we go. That's one part of the channel. And then I'll just show you the other part of the channel. And really all I'm doing here is I'm just showing you kind of how it's trading up and down. But I do think that we're going to see a pullback. We're going to see a movement back up again. We've pulled down, and I do think we're moving. We're going to move up till we get to this this upper bound of the channel. I think that we're in this channel. So, long story short, I definitely like AMD. It's got a 100% checklist, and the funds are moving into it. And I do think this is not necessarily a bad place to buy it at. Let's see if we can find another buy point on this one. Really, the next strong buy point is the double bottom pivot, which is basically at 88.72. So. The pivot on, and I'm just going to put that out there, AMD pivot for the double bottom is equal to 88.72. So we're not quite there yet. We're a little bit underneath that. We're a little bit beneath that. Let's look at Chewy. And of course, Chewy, interestingly enough, is the not the successor, but sort of the heir to a company that I remember back in the day. It was an exciting company. It was called Pets.com. Never made a profit, but they were in the pets food space about 20 years ago, and they blew all their money basically on one Super Bowl ad kind of a la, Apple, and of course, needless to say, it went down. But I think things have changed since then, and Chewy may be the thing. A lot of people don't have children; they're too expensive, but they have pets, and Chewy definitely is big in that area. So, kind of your Amazon for pet food. The biggest issue that I have isn't really technical; it's fundamental. I think that there's very little of a moat on this one, as Warren Buffett would say. I think this would be very easy. This would be very easy to compete against a company like this, because there's a lot of different sources for dog toys and dog food. So what do I like about this one? Well, there is a formation on a cup with handle, and the buy point is 70.72. Now, would I buy it at that? Well, it's almost there. It's 70.30, so it's right under that buy point. So let's look at the buying criteria. Well, they're pretty good. 8 out of 9. That's darn good. Also, we have 350 funds in it, so that's looking good too. Let's look at earnings. Well, we came through earnings, so we do have, we are kind of essentially getting closer to earnings, and we definitely have some very strong sales numbers. And in the growth stock, everybody, this is one of the most important things. We want to see consistent growth, and that's why they call it a growth stock, right? I guess. Profitability is important as well, but this isn't profitable yet. But it's the sales growth that counts, and definitely Chewy has it. So, would I buy this thing? Well, you could buy this, absolutely. This could be bought. I'd be careful with this one though. If I bought it, I would definitely set my stop loss. So let's look at that. Let's kind of put the channel in there to see what's happening. It's about in mid channel. So I do suspect this is going to probably move higher, at least probably for the next few weeks. That's kind of what it looks like to me, because unless it breaks its trend and it moves downward, I think that the next few weeks this probably will move higher. So I have to give a thumbs up on Chewy, and you could buy it at this level. You definitely can. So not a bad looking chart at all. For a dog food company, a dog toy company, looking pretty good actually. Looking pretty good. All right, so let's get an idea of what do you think Monday will look like. We're expecting a pullback before surging higher. Well, you know what? I don't think there will be. I don't think we're going to have a pullback, and the reason I don't think we're going to have a pullback, a significant one, anyways, is because we've had the follow through day. The change in direction in the general market happened on Wednesday. And by the way, if you ever want to get information on that, I sent that out in the action trade alerts. And basically, to get on that list, to get the action trade alerts, it's super easy to do. All you have to do is go to www.Dallas Trading Floor and then fill in the subscribe to action trade alerts. And of course, it's all free. But I did send this out. We did have a change in market direction on Wednesday. And we moved from a correction to a confirmed uptrend, and that's a very critical thing. So I do think we're in the very beginning stages of a rally on the market. Now, how long will that last? Who knows? But we're definitely in a rally, and so I don't necessarily think there's going to be much of a pullback. There may be a little bit of pullback on Monday, but I do think that I do think that we're probably headed higher based on the charts that I'm seeing so far. So that's kind of that's kind of what I'm thinking. JMIA. Let's take a look at JMIA again. And this, of course, is the German company that operates basically e-commerce in Africa. So kind of an interesting business model there. 98 relative strength. It's still kind of tough. It definitely has pulled back from when it originally IPO'd. It IPO'd at $14.50, and then it popped up to well over $40. It's pulled back. Before I would buy this one, I would want to see it. I would buy it at this level because it's an IPO. I would wait until it's exceeded $49 a share. And you say, well, why would you buy something at $49 a share when you could possibly buy it at $18.91 where it is now? Well, The reason is because it needs to show that it can move through the resistance at 49. Now, you could also day trade this one as well, but it has earnings in basically in 4 days. So if they disappoint, and there's a big potential that they will, because I'm looking at their sales growth, and their sales growth is down, I think this one can pull back. So I would not be a buyer into earnings on this one, even though it has a 98 relative strength. The checklist is also 6 out of 9. That's my minimum. And it does have decreasing fund ownership, but just slightly. So I would not be a buyer of this one into earnings. I want to see more strength, but I definitely would watch list this one. So that's my take on JMIA. Okay, so let's see. Why did you get out of Tupperware? Good question. I got out of Tupperware. The reason I got out of Tupperware is because I wanted to. I did make money in Tupperware, but the reason I got out of it is because as the market changed direction, I anticipated that there were going to be some better opportunities, and indeed there were. And here's what happened, because in the small portfolio I was in Tupperware, but I did sell it. As you can see, it's down here. We did sell Tupperware. All 26 shares of it. We did make a little profit, not much, about 3%. But what I wanted to do is make room in the portfolio for Palantir, which I thought would be very good, and indeed that has been the case. It's up 17% currently. So that's what I did. When I get all the pieces of the puzzle here, what I try to do in the small portfolio is I try to weed out the weaker sisters. So once I'm completely invested, then I'll look to sell some of the ones at a small gain and keep the ones that are gaining bigger. So that's the reason I sold Tupperware. It's not a bad stock at all, but it's just I wanted to make room for higher, more quickly moving stocks. So that's a really good question. All right, PPL. People say that Palantir is a good for the long-term. Thoughts? I think so, Jorge. I really do. I think that Palantir is good for long term, because Palantir has software that does something that's very important, and that is increasingly in the world we have problems with communications being intercepted and knowing when that happens. And Palantir has products that sort of help in this process. So I think it's at least in this cloud-based, information-based world, I think that Palantir has some very good products. Now, here's the thing. Another thing about Palantir. Palantir was basically one of the big VCs on this is Peter Thiel, who basically was the VC behind PayPal and behind Tesla. So, pretty good track record there. That's one of the reasons I think Palantir is good. It's normally I am not a big fan of IPOs, but this one is an IPO and it's been seasoned a little bit. So that is one of the reasons why I moved into Palantir, and also had a very good chart. All right, what about Microsoft? One of my all-time favorite stocks. Last 3 years ago, I was trading Microsoft like I've been trading Tesla this year. So I still have almost everything good to say about Microsoft. So let's look at the chart to see if there's any place to come in here. Now on the weekly chart, we have a consolidation, but let's look at the daily chart. I do think that now, since if we have some clarity, hopefully we'll have more clarity on the elections, but I do think that it's the fact that we've pulled up a little bit. This is a relatively stable stock. At 223, I think it's about midway in the channel. I do think it's going to see some resistance on a consolidation base at 232. So we're about $8 away from there. It's got an 81 relative strength. So I do think you could come back into this. We do have increasing fund ownership. The checklist is 7 out of 9. So that's quite good. This is more of a slow and steady wins the race kind of stock. It also does pay dividends, and it's both in the NASDAQ 100 and it is in the Dow Jones. So it's a very important stock, but I do think you can get into this at this time. I do think that we have potentially, a fairly good channel on this one, moving forward. Now there are a number of issues though. What I like about Microsoft right now is that we see that the 21-day exponential moving average has pulled above the 40-day, which is excellent, and we also see the 10-day making that move as well. Microsoft is moving higher, at least in the short term, and the next key level, and actually it's a pivot, is 232. So if you were to buy Microsoft right now, you'd be buying it a little bit below the pivot. That sometimes is a good way to go. Now with Microsoft, because it's so widely held, I don't think the pullback will be that severe on it if it did pull back. Now, why do you buy in pivots? Well, pivots are kind of like little shelves that it's hard for the stock to collapse through. So if you wait to buy until a pivot, when the stock reverses, it typically will not move very quickly or at all through the pivot. So it's sort of like a step. You want to buy it at the bottom of the step, and that's how you do it. So I definitely, if you want to be very safe, I would wait until Microsoft was at 232 and then buy it at that point. But you can still buy it at this level. You just have to be forewarned that you might get a snapback. I don't think it would be severe in Microsoft, but you might get a snapback. Entry point for Square. So let's look at Square. Of course, Square, as you know, is one of the two Dorsey companies. The other one is Twitter. Twitter has not been doing as well, but Square is another story altogether. Square has been doing fantastically, and you can see there was a gap up. It had great earnings. I think that there may be an all clear on this. It's up $22 a day. This is excellent. 100% on the checklist. It's got excellent fund ownership. Let's kind of look at the trend here on Snap. Going into the end of the year, this could well go above 200. This could go as high as about 220 probably by the end of the year. So I do think we're going to see it move up to this red line that I've drawn here. That's the top of the channel. And of course, let's take a look at the lower part of the channel here. I didn't quite pull it on there. Okay, that's not quite right. But that's the lower part of the channel. So you do have quite a bit of a variance between the upper band and the lower band. But I do think it's heading north, at least for right now. At least for the next few weeks, I think it's going to pull above 200. So I think Square could be very, very good, at least in the short term. At least in the short term, based on the charts that I'm seeing. All right, let's take a look at Intel. Okay. Thoughts on Upwork? Let's look at Upwork, and then let's take Intel, and that's probably going to be it for today, unfortunately. UPWK, Upwork. And of course, everyone knows that Upwork is a kind of a cool company. You can get experts really from all over the world, and it's a website kind of like an Uber, gig economy. Their earnings per share, which is super off the chart, excellent. Yeah, this is the winner chicken dinner. 98 relative strength. Yeah, this is one you probably want to be in your portfolio. 98 relative strength. Very nice, very nice. Excellent checklist. 8 out of 9. It's got increasing fund ownership. Let's look at the kind of what I think is important to look at here. Let's look at the profitability. Well, look at those sales. They keep it going up each time. That's excellent. And one thing I like about this, as opposed to other companies, Upwork is actually profitable. We're not buying a pre-revenue kind of company here. We're buying a winner. So I really like this. And also, another thing is that we have pulled above the all-time high at 2470. So this may pull back a little bit, but I think you could definitely. This is a breakout. You could buy this one on Monday. I think that this one may be a Monday buy. I think the markets have closed right now. I wouldn't buy this in the after hours, but I think this is probably likely to go higher on Monday. So very, very good one. I'm going to put this down on my watch list. Upwork, and it's UPWK, and that's the watch list for Monday. All right. So let's take a look at let's take a look at Palantir, Square, Microsoft, Should I move my Robinhood from Charles Schwab or Chase? You know what? I would recommend Charles Schwab. That's my humble opinion. And here's why. Here's the thing about Robinhood. Robinhood has a tremendous interface. It's a very good interface, great, easy to use. But the advantage of Schwab, and I use Schwab, I use TD Ameritrade, and I use Fidelity. And why? Well, with Schwab, you typically get the best prices in a fast market. I've found that Schwab tends to have, they're one of the biggest, and they're very well run, and they have the backing. Robinhood's a smaller company; it's a secondary broker. They buy through primary brokers. Charles Schwab is a primary broker. I know this sounds really strange, but some of the brokers buy through other brokers. I know this is strange, but this is how it is. Charles Schwab is a primary broker. I recommend them. I'm not getting any money from them. I should. I should probably put something on my website to introduce people to Charles Schwab. But I do. I've had Charles Schwab for many, many years now. I've had Charles Schwab basically since they were a mighty small company. I think they had 6 offices in the United States when I first went with them. And this is literally, here I'm showing my age, but it's literally about 35 years ago, as long as I've been with Schwab. I have very good, Schwab has always come through. So that's why I like them. PDD, let's look at PDD. PDD. Did I get that in there right? PDD. All right, Pindu. Okay, this is a Chinese provider. This is a tough one. It moved up nicely, though. Good chart, by the way. Good chart on this one. Relative strength of 97. That's looking good. The checklist is strong. 8 out of 9. We have good funds in there. I like that. And most importantly, we've got increasing sales. I really like seeing that. That's a big deal on a growth stock. Now, there is one area of concern, and that, of course, is that they're not making any money right now. But with the increasing with increasing sales, that is not necessarily a problem. And it does look like we had a breakout. Now, here's the issue. I don't buy this thing for 6 days. Why? Because in 6 days, we're going to go through earnings. This thing could very well pull back to the pivot in 6 days. It's very possible that it would pull back to about 96. So I would be a little bit careful entering at this level, but it is a good stock overall. I just don't want to buy it into, I want to give it a little bit more of a ramp into earnings. It's earnings in 6 days, and that can be problematic. But other than that, looks good. PDD, I have to say. So that's kind of my opinion on it. Rocket Mortgage, they got earnings next week. Okay, so Rocket, RKT, this is basically old Quicken Loans. I think they are the largest loan originator in the United States. Now, here's the problem that I have. They just came out. Here's the problem I have. If this is a IPO, and it has a typical IPO base, and it's not ready to buy, and I'll show you why it isn't. It may be, but we've only been really in existence here since September. So what's happened, of course, is that we IPO'd at $18. It moved right quickly up to about 26, and then it went higher, but it's pulled back. So what's going to have to happen is it's going to have to exceed. It's going to have to exceed this level here, which is about 34. And we're not even close to that at 21.31. So even though we're up $3 today, I think you don't want to buy this one right away because it's only 6 out of 9 is good enough for me. We do have funds ownerships that we just started with 124, so that's very good. I think this is more of a watch list. It's only got a 35 relative strength. But look at the sales. The sales are just going way up. Now, here's the thing about a mortgage lender. Mortgage lenders, because they lend other people's money, their definitions of sales is a little bit different than in a real company. So, on balance, I would say don't buy this one yet. Wait to see if the market gets stronger for homes. I think this is a watch list. I don't think this is a buy right away. Well, actually, I have somebody calling in here, so I will probably take their call in a second. But it's been almost an hour. In about 15 more seconds it is. I want to show you very quickly before we leave today Some of the things that might help you in canceling trading. These helped me a lot when I was starting to learn how to trade, and that was basically books by William O'Neill. And I want to show you two books that that might be really helpful. It really helped me and made a lot of money for me over the years. And that is this one, How to Make Money in Stocks: A Winning System, Good Times or Bad, by William O'Neill. And then there's a companion book, How to Make Money in Stocks: Getting Started, by Matthew Galgani. And these are both available on my site, www.DallasTradingFloor. But these two books, if you read these two books, you're going to understand more than many Wall Street traders, believe me. These two books are excellent and highly recommended. And of course, I use a canceling method in my trading, and it definitely has helped me. So that is my long and my short of it. If you want to get the action trade alerts, again, they're super easy. Just go to www.DallasTradingFloor, first and last name, and email, and you can subscribe to it. Of course, it's all free. So until Monday, happy trading. Stay safe.